Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, on this triumphant Tuesday for another YouTube video. We are going to be giving you your daily cryptocurrency market update, and there's some really interesting things that came out of yesterday. We're going to be looking at Bitcoin from a technical perspective. We're also going to be bringing in that dark cloud that is above us of monetary tightening, and we're going to be talking about it, and we're going to be sort of, we've been expressing over the past week our thoughts on a rally. I'll get rid of the draws that we put on. We've been really expressing our thoughts. Really here, we thought actually the market stood a really good chance of rallying. We had this short squeeze, so we've essentially had the FTX spill. In my opinion, it's been too much of a weak spill given the Goliath that FTX was, and this sort of is showing somewhat strength in the market relative. But remember, on this FTX spill, you actually had the dollar plummeting, and Bitcoin didn't appreciate from that at all. So it kind of explains a little bit of Bitcoin's strength right now. But there's a few things that took place. You guys will know that we were filling everybody in on this short squeeze. We said, look, we closed all our shorts here after being aggressively short on this grind line. And essentially said, look, you're going to get a short squeeze here because everybody's bearish, right? And not just is everybody publicly bearish, their positions are matching it. We had a record inflow of coin shares, short products for the crypto market. And every time you get that, typically you're going to get a shakeout or a rally. And that's what we essentially had here. We had this short squeeze, a beautiful double bottom here. Very important to pay attention to these. And then we did find ourselves back in the range. Now, the dollar saw quite a bit of strength yesterday. And you guys will know, and it ties in with our sort of overall thesis that the market is going lower. But if I was to bias, I think you're going to at least get a rally up to here, potentially here, and maybe even retrace the whole of the FTX contagion before you get that next leg lower. It's too obvious that the market just rolls here. It's showing relative strength. There are... If you're looking to long the cryptocurrency market like we are right now, there's levels you got to watch that you don't want to break. So here's a very, very significant one. You can see just how much it's acted. Again, you've bounced off it. Do you now clear? So let's put this back on. Do you now clear this next level of support? And sort of hold it and then look for the upside. I think that's a lot more probable than the downside. But it really depends on the dollar. The dollar got quite a bid yesterday, which saw this spill to the downside. Since then, it's fizzled. The dollar's down today. The futures market is up. The stock market. Stock market was really dragged down yesterday via what happened with China involving Apple and how they took a loss on it because of the zero policy. But today, the stage is very much set. You have a slightly weaker dollar, and I'm going to talk about the dollar in just a second, and we're going to bring it all full circle into the sort of broader macroeconomic landscape, which we think dictates everything in terms of asset classes. But the dollar's somewhat weak today. Now, it may reassert. That's probably going to have negative connotations for the crypto market. But as it stands right now, you've got the gold up. You've got the UK market up. You've got the Hang Seng, I think, was 6% up today. This is sort of setting the stage for a good day for the crypto market. And this is tied in with what we've been talking about in regards to a rally that's going to occur. When I say there's a rally going to occur, ladies and gentlemen, it should be taken very seriously as somebody who's as bearish as I am, okay? And I still am bearish. And if you're trying to get longs here like we are, we longed the likes of Chili's and a number of other altcoins yesterday. You can go over to my Twitter, and we're going to bring my Twitter in just a second. You're kind of playing Russian roulette. You know the gun is loaded. You're just hoping that when you pull the trigger, you're not the unlucky one with these longs, because we know the gun being loaded and that one bullet is ultimately downside for the cryptocurrency market. We are very confident of that, given the situation that we're in. I think that it amazes me how people aren't questioning the very fabrics of the financial system that we live in. With what's going on right now, because there's huge craters and kind of inefficiencies already showing up with the interest rates where they are, and they are set to actually continue. And what FED Bullard said yesterday really confirmed this, and kind of, using the terminology that markets are underestimating the Fed and the FOMC and what they're doing. So you're kind of playing Russian roulette. You just, with these longs, want to hope that when you take them, you aren't the unlucky one that gets pulls the trigger at the wrong time. So you're really playing Russian roulette. knowing that the market's ultimately going to roll over. But I do see a run up to the upside before we get that continuation to the downside. And this is something that we've really looked at. It does look to be playing out. We've maintained a long bias from here. From a day trading perspective, short term means anywhere up to sort of 3, potentially 4 weeks, a month. But mid to long term, we're still extremely bearish. And we're going to talk about why that is again in this video, because it's so important to really understand this, to really grasp the concept of what's going on, to understand that it's the ultimate manipulator of markets, what the Fed are doing in regards to liquidity and how they're affecting the money flows. And you know, you'll do quite well. So this is very much a probable scenario for me, running back up to 18K. I don't know how much further it gets. Maybe we get somewhere around 19.3, and maybe we even run all the way back up here and even put a leg in higher before we get that next leg lower. And at this point, everybody would be bullish, and you know, people's portfolios would be ripe for the picking. People's positions would be ripe for the picking. So we're really watching this and chopping this up. Again, there's not only is there levels to the upside, you've also got to watch these levels to the downside. So obviously you come down and you start breaking these. You know, first of all, you lose here. Look for some support here. You break this, and then it's a staircase down, as well as it's sort of a bit more of an impulsive staircase up. But this is really the scenario we're watching for, is that continuation to the upside. And we've been right so far. We'll happily admit when we're wrong, and we'll look to actually go short and fade this. You know, maybe do something like this and it comes down. But for now, we're still bias long, despite everything that's going on. And that has a lot to do with the dollar. So we've got the Eurozone inflation, or is it GDP coming out? We've also got GDP for the US. So there's a number of things. Our long scenario really relies on a weaker dollar. So I think the dollar's going to reassert. I think people are going to be amazed when it does, because I think essentially what you're going to do is the exact same thing you did over here. You're going to put in marginally higher highs, and this is kind of how, you know, or maybe you get a big run to the upside and we run back to that sort of 120 mark. But for now, in the short term, which is why this is a short-term prediction, if the dollar remains weaker, it's likely that crypto may rally. But I want to just give this warning that for me, this is not a bad candle that we're getting. Was it the monthly candle? What was the candle that I wanted to show you? This candle here shows that you've got real interest on the daily in this position, and this position being held. So you've got to watch the dollar to sort of figure out what your longs and shorts are going to do on the crypto side of things. But we are still short-term bias bull, which is very unusual for me. We've traded the short. We now said, okay, here, we need to get out of the position, take profits. You've come to the upside, and you now look like you want to continue that journey up. Now, to bring in the depressing side of things, and that is what's going on with monetary policy. Why is monetary policy so important? We did this in our Cardano video yesterday, so I'm really just going to very, very, very quickly skim over it. Where is that little bugger? Here he is. This is the federal funds rate. So this is the interest rates from the Fed. This is a speculative tool. We know that markets essentially sold off on the expectations that the interest rate was going to go up. Why is this? Well, we've really drilled home, and I don't want to keep doing it, this concept of liquidity. And really, we're waiting for a reversal in this to get bullish and suspect that there's going to be some sort of a sustained rally for the cryptocurrency market. Until this happens, we think that the overall macroeconomic situation does not dictate that there's going to be a bull market just yet. I think it's going to come around a lot sooner than people expect, but I think likely it comes around on the back end of them breaking something. So this has seen a bit of an uptick. I mean, look how correlated these are, guys. You know, why have you seen this little pause here for the crypto space? Well, we had, in the FOMC minutes, they were expressing concerns of the aggressiveness of their interest rate hikes and how we haven't seen the full effects of them. So this, of course, brings off that bullish narrative where the Fed are going to be dovish and we're going to see a rally because the Fed aren't going to do as many hikes as are priced in. Well, yesterday we had FEDs Bullard. Fed has a way to go on interest rate hikes. I'll read this bit and then I'll go over a few tweets. And then this is why we think that taking longs right now is very much like playing Russian roulette. Because ultimately you are going to get that downside, in my opinion. But I think you get a little bit of upside before you get that downside. It's too obvious for me that we're just going straight down here. I think there needs to be something that gets everybody bullish again, only for us to pull their pants down, essentially. So This is on November the 28th from Reuters. The Federal Reserve needs to raise interest rates quite a bit further and then hold them there throughout next year and into 2024 to gain control of inflation and bring it back down towards the US Central Bank's 2% goal. St. Louis Fed President James Bullard said on Monday, so this was yesterday, we've got a ways to go to get restrictive. Bullard said in an interview with Market Watch as he restated his conviction that the Fed's target policy rate needs to rise to at least a range between 5 and 5.2% from the current levels of 3.75 to 4 to be sufficiently restrictive to reduce inflation. So back to our, where is he? Here he is. Chart. Right now, interest rates, this is the 30-day Fed Fund future. So this is a way for people to speculate on pricing interest rates. So when it goes down, it means interest rates are going up. And the current pricing is 95.875, which means they have interest rates priced at 4.125, okay? So that's what the markets are pricing in. After the comments, we lost about 50 basis points after the comments from the Fed, and we've seen a slightly lower inflation. But what Bullard is saying here, and he said it in a number of different ways, we'll just read some of these, is essentially that, we are looking at a further interest rate hike to around about at least the 5%. So coming down here somewhere, and then actually potentially moving up to 5 to 7%, which means there's a lot lower for this to go down potentially, and we already know what the effects of this going down, which means interest rates going up, has been. So that really steers me to believe that there's more pain coming ultimately for markets. This is something that we've been speculating on for a long time now. Let's just read some of these from the breaking news. Fed's messed up. I don't believe the Fed is close to a pause on tightening. This is all from yesterday. FEDs Bullard, the housing market is returning to a more balanced growth path. So he's not admitting the signs. This is from the FEDs Bullard. We need to keep rates at sufficient restrictive levels for a longer period of time to ensure that inflation returns to our target, which is 2%. Remember, we're still at 7+%. We've got the CPI print coming out next month. So what happens there? Maybe that's the catalyst that sees a bit more continuation for the crypto market. But we can go on. The FEDs Bullard, the markets are underpricing the risk that the FOMC may be more aggressive. I believe 100%. And when you see these rallies in the stock market, how do you think the Fed takes that? They're not going to be over the moon with the stock market rallying in their face when they're trying to do the exact opposite thing. So this is the eventuality of what comes. And I'm telling you that this has to come lower. They're talking about bloody bringing rates potentially, if they go to 7.5, right down here from where we are. If they go to 7. Okay, now 5's a lot more likely. Markets aren't quite pricing that in, but you may get some confirmation of that. Let's say we get a higher inflation print. What's going on in China? That may stir up inflation. This is stuff you really, really have to pay attention to because it's driving our market. We're showing you concrete evidence. Maybe it's just a complete coincidence. But I would argue that it's not. It's all about liquidity. And the problem with when you raise interest rates is liquidity has to go from elsewhere, this big pot of liquidity that's, divested into various different assets. Now you've got to sort of reallocate that whole bundle and factor in a higher interest-bearing debt market and how this may affect things. And this is what's driven the market, and it's going to continue to drive it. So even though we are short-term bullish, and we still are, I think the eventuality is that things come lower, and we're still waiting for significantly lower prices on the stock market. We think the dollar's going to reassert, and I think this comes on the back end of the Fed not messing around, and everything's going to sell off as a result of it. And that's really the play moving forwards, guys. This is some of the most valuable information that there is on YouTube. So if you guys can do me a favor and share these videos around, certainly like and leave me a comment, even if it's just one letter. that would be greatly appreciated. That's all I've got for you in this video, guys. You enjoyed the content, like as always, appreciate it, so as a comment, and I look forward to seeing each and every one of you in the next YouTube video. Have a wonderful Tuesday, guys.